Before you proceed with this video, be sure that you have went through my other videos on how to sell a put. Hey guys, it's Neil from Terrific Trades, and today I'm going to teach you how to make money in the stock market without actually buying a stock. In my earlier video on how to buy a stock at a discount, you're required to have the capital to buy one contract of that specific stock. By the way, if you don't know what a contract is, then you are in the wrong place. So go check out my introductions to options video by clicking on my face. Let's say that Tesla stock is valued at $400 and you don't have $40,000 in your account to buy a contract. If you can relate, then you're in the right place. Today, I'm going to be explaining how a bull vertical put spread works and how you can milk money week after week with a high probability. The whole idea behind the strategy is that you have to be either bullish or neutral on the stock, which means that if the stock goes up or stays there, then you make money. Meet Sarah. She wants to make money playing Tesla stock options, but she does not have $40,000 to buy a contract of Tesla to play the covered call strategy or the selling put strategy. To execute the strategy, she has to follow 3 simple steps. Step 1. She is going to sell a put at $360. Step 2. She is going to buy a put for a lower strike price at $355 and collect the credit of $2. Step 3. She keeps her fingers crossed and hopes that the stock closes over $358. You may ask, how the heck does $358 have to do anything with this? Her max loss is usually the width of the spread minus the premium received. In this case, the width is 500 because of the put that she sold at $360 and the put that she bought was at $355, giving us a $5 difference. The premium that she received in this case is $2, so the max loss that she would get would be 5 minus 2, which is equal to $3. And since we're dealing with a contract, we would multiply it by 100, resulting her max loss to be 300. According to Sarah's research, there's an 80% chance of Tesla stocks to increase, making this trade a reasonable choice. To sum it up, in the best case scenario, she will make $200, and in the worst case scenario, she will lose $300. Nothing above that. She must have a collateral of her max loss available to execute this trade, which is $300 in this case. This trade can be done with any number of contracts as long as you have the collateral in your account. I hope you guys learned something from this video, and if you need clarification with anything, then please let me know in the comment sections down below. And please like and subscribe to my channel. I try and upload every day, and I will make up for it if I don't. Thanks for watching this video, and have a nice day. Bye bye.